In the equity markets, again, trading curbs hit today to the downside, but maybe a small glimmer of hope with the way we reacted in toward the end of the day. The Dow, the Nasdaq, the S&P all down near that 6-7% mark, but the Nasdaq specifically rallied up and finished down only 4.7%. I say only because that particular percentage move doesn't get into the top 8 in terms of largest percentage moves single day, but the 344-point drop that we got in the NASDAQ does. It falls in sixth place in terms of point drops, and that should kind of give you an understanding of how much more important the percentage moves are than the point drops. So when you're looking at it, you should be looking at percentage, although it was a substantial point drop in the NASDAQ. That rally back cut it a little bit. In terms of performance, information technology, NASDAQ is obviously a technology index. IT was actually one of the better risk performing sectors today. It wasn't down as much as, say, energy or financials. It also didn't play off as well as consumer staples and things like real estate, but it was one of the better risk-on performers, for lack of a better phrase, when you break it down to the sector level. There were individual stocks that did really well, stocks in the telemedical, for example, stocks like in the conferencing, like Zoom, for example, did pretty well. Those are in the NASDAQ, and they helped to kind of hold the NASDAQ from just being a completely horrible performing sector. So the sector didn't do as bad as you may have thought of when you look at the overall move in the equity markets. And lastly, there's some pressure on a lot of these companies as the bailouts start to come to fruition. Just got word that the Senate passed the House of Representatives bailout package, and it's headed for the president's desk. Some of that money will be going to companies that need bailouts, and if any of it gets to these companies and they buy back stocks, that's going to be a very bad look. There's been a lot of pressure on them to do nothing but support employees, support business, and do not buy back stock. Interestingly enough, Starbucks talked about buying back stock today, but not with bailout money, with their own money. Seeing how depressed the price of stocks are, it's not the worst move. But in terms of the tech companies themselves, if any of them were very cash heavy, the big ones like Google and Facebook and Apple, for example, were to buy back stock at this time, it'd be a very bad look, and they're getting a lot of pressure on that. So watch those individual stocks and the index as well on the future side of things if you start seeing this kind of news.